right, how are we doing? So I made 4,000, just under 4,500 on a trade this week. So on a 50k account, so it was pushing 8.5-ish%, 8.6%. And I want to talk through how the system that I've used to trade has switched from going from 1 to 1.6 to 1.7 or, which is what I was at for about 3 to 4 months on the turnover between 2024 and 2025, to now being able to extract, so hitting my first 10 to 1s risk to reward, 10 to 1s, but I didn't make 10% because I was in less than 1% on that trade, if that makes sense. So I was pushing up, I hit a 10 to 1, 13 to 1, I've hit like 15 to 1s. So let me run a little bit. I have, over the past year, evolved from switching from trading the higher time frame to then trading the lower time frame. So going from very low risk reward, but a high win rate, to a very high risk reward with a lower win rate. Of late, I've combined the two now, and it's so sweet, so sweet, because it's using the best of both worlds. It's using only trading at the daily or the 4-hour levels or the areas, let's say, and then having a refined entry strategy. So I'm going to go through a case study of my trade from last week and show you how you can actually hopefully do that for yourself, to be able to actually maintain a high win rate whilst also bumping up the risk reward. So let's jump into it now, and we'll go through it. All right, so this is the trade. So it's a GBP CAD, long. So we can see here the two entries. So we can see the initial entry, which is my old strategy or the old way of entering at the daily zone, is a 1 to 2.3, and then the more refined entry 1 to 8. So again, overall made just about 8, just over 8.5% on this when we hit DP. And again, called out in my Telegram group if you want to join that. Down below, it's free. Just letting people know, scaled in on the lower time frame, etc. So the thesis for this, as we can see here, came from the higher time frame. So we can see each of these is the beginning of a new month. So a big part of my thesis, which I've only incorporated recently, is utilizing the monthly switchover. So treating each month as a narrative, as a timing cycle. Same way it's a monthly candle. So what is the candle doing? And again, when I switched to my lower time frame strategy, it was heavily based. All of my entries would come around the switchover of a 15-minute candle. I then applied the same principle, but applied it to the monthly time frame, which is something that I took from Stacey Burke. So, new month, new timing cycle. We will typically have a false break at the beginning of a month, a false break or a break and continue. So here we had, our thesis came from a false break of 2 monthly lows. So we can see June and May's low. We come down, break below, and close back inside. So that was my thesis taken care of. New month, false break of two monthly lows. Boom, I'm looking for longs. So then, based off of the EMAs, as soon as the 13 and the 50 crossed, we broke above and retested off of the 50 EMA. Boom, I'm in this trade. I want to be positioned in that as soon as that happens. As soon as the 30 and the 50 cross, we break out and pull back. I want to be in that trade. But again, that doesn't give you a very refined risk reward at all, because again, you're entering off of the hourly, and I want to have my stop at the low of the day. So using daily closures, or as in like daily extremes. So this is more of you could say a 4-hour daily or a 1-hour entry. Hence the low risk reward, 1 to 2.3, which there's nothing wrong with at all. But again, my profits were maintained around a, how do I go back into my Notion? Here we go. My profits were stagnant around the 3.8% mark, really. You can see here like multiple months. So December 3.8%, January 3.8%, February 3.87%, and then this is when I then started taking more trades, incorporating the lower time frame in an attempt to get this 3.7% higher. So first month of taking more trades, lower time frame, win rate went down percentage dropped massively, then started to nail the lower time frames. Very good month, 7.8%. Then took a lot more trades, and this is when I realized, okay, my win rate is actually only 40% on this lower time frame, because I was just taking it every time it presented. I didn't have the higher time frame area, so I didn't have the wave behind me, the whales, the banks and everything, or just the extra layer of probability behind me. So that then incorporated the two. So had the higher time frame backing with the lower time frame entry. Best month in the last year, 13.65%. Ended up then investing in a course and trying to incorporate that, and then ended up breaking my 11-month profit streak with a negative 2.75%. Again, just trying to trade a new concept without having backtested, etc. So then I only took the element from that, which is the monthly switchovers, and then just went back to just merging my two concepts together. And yeah, we've just first week of the month finished, and we're up 7.8%. So there we go. So that's the reasoning and the thesis behind it. Then the way that I'll actually show you how I actually enter. So that's the first one covered. You can check out my other video on how I get my bias based on the EMAs and support resistance levels. That's how we got this initial entry. So the thesis from the higher time frame, we break above, simple break and retest of the higher time frame, simple break and retest of the EMAs, so the 13 and the 50 EMA cross. Boom, I want to be in this market, but I don't have a refined entry. We then continue to go sideways, staying above the EMAs. That is all I need to see then to look for a re-entry. Then for re-entry, I'm dropping down to the lower time frames, so the 5 minute and 1 minute. This was a 1 minute entry. So my 1 minute entry, or my lower time frame entry, I should say, is this. I'll just explain it here. So I want price to come to a level, extend to a level, go sideways, and then have a double breakout structure. So break structure once, and then the ideal one is if it then goes sideways after the first breakout structure to then break structure again. So simply is price extends to a level, goes sideways, then breaks structure twice. The best trades will be when it breaks structure, goes sideways again, then breaks structure again. So all of the most explosive moves will come out of coils, out of consolidations, outside of sideways movements. The market will lull us into sleep, and then boom, explosion, and then we get sucked in again, explosion. So I'm looking for that here. So we're at our area, because remember our area is here on the higher time frame EMAs. We then break structure once, and then we go sideways, and then we actually get another fractal version of that again here. Whoopsie daisies. Where is it? There we go. So here's the 5 minute break of structure, go sideways, break of structure again, and then also on the 1 minute. There we go. So here was structure point. This is the most recent significant high. Sorry, here. So price is here, put in structure, break structure, and then once we break structure again here, boom, I'm in this market, because now we've broken structure twice. First break of structure, put in a new high, second break of structure, boom, I'm in. And because this is a lower time frame, my thesis is that this is the low of the session. So my stop will just go here, just below. It could even go here, but again, we want to give it some breathing room because of spread, because of they might come down one more time, etc. So what did I give here? I just gave it an extra 3 pips. So in total, this stop was 14 pips with 123 pip gain. So the reason that we could hold on for 123 pips is because we had the monthly level pushing this trade, and then we were able to actually increase. So this trade here, this initial entry, I entered in 2% because we have the backing of the higher time frames. We have the 2 monthly levels, falls broken, pulled back inside. If this was to continue to the downside, there's no need for price to come back up and close inside here. So as soon as we broke out of the 2 levels and pulled back inside, then broke structure, I'm willing to bank, or I'm willing to risk 2% on this trade. One thing I'm learning more and more is from all of the best traders I'm listening to is the big thing that stands out from them is they capitalize massively on the winners, that they're willing to, as they say in the playbook, get uncomfortably big in when the market is setting up right for them. So this is ideal. Beginning of a new month, false break of two monthly lows. This market is something I want to position myself more in. So entered in initially with a 2% and then scaling in with a 3% here to be in with a total exposure of 3% and then extracted then, yeah, up to 8.5% on this one move. So guys, all you need is kind of one or two of these, or all I'm happy with is one or two of these per month. And yeah, it's more than enough, more than enough. And then again, there's continuation trades, but I just want to focus on this, the fact that we can identify the trade from the higher time frame. So identify, let's put up something different just so we can talk through it. So let's say here, so on G Swiss, so we have a new month beginning, a false break of a previous month, and then price break structure on the inside. So this market is now primed to explode in this direction because we have the backing of the monthly and then the higher time frame structure being broken. So this is a higher time frame direction. If we can then drop down, so initially get in based off of the 4 hour or the 1 hour, but then drop down to the lower time frames and see if we can actually find an entry. So let's see if in these sessions we can find an entry. I don't know if there will be one here now, but so here, for instance, again, I only trade New York. I live in Peru, so here, again, this entry comes after the New York session. So remember, what we want is for price to extend to an area and then break structure twice. Again, the whole reason for breaking structure twice is it just keeps us out of so many times where price will break structure the first time and then just continue down. Just increases our probabilities, just increases the win rate. So we break structure once and then second break structure, boom. You can be in that market then with your stop at the low and then give some breathing room again. Let's say some 3 pips breathing room. That one will work out very nicely using the lower time frame entry and then taking it to higher time frame zones. Works out a nice 7.3. And then let's say if you were in on the higher time frame based off of the break and retest. So higher time frame, break out of the monthly level at the beginning of a new month, break structure on the inside. Once we broke structure here, do we break structure? Yeah, we do. Once we broke structure here and retested, I'll be entering my first position here. Same thesis as before. So break down, and then once we come up here, and my stop would have to be the whole way down here. So from the higher time frames, you're only getting a 1 to 7.3, but then with the refined entry, you can add on much. The thesis is the same, but a much more refined risk reward. So then in total, you're looking at about an 8% there. And again, on this one, because it's such a deep stop, but because we have the higher time frame backing, I'm willing to risk more than 1% on this. So you compensate for the lack of risk to reward with more position size. Do be careful though, because my prop firm actually emailed me with warnings about pushing my margin too far. So just make sure that your prop firm, if you're trading with a prop firm, my one allows me to use up to 70% of my margin. So do watch that if you're scaling in with multiple percents. Cool. Yeah, so that is it. That's how we can actually squeeze more out of trades. And then just one thing else I wanted to cover. So I always do my weekly review and then going in and studying the trades that I took. Even though I'm very happy with how much I maximized this trade. If I was to maximize it more, what I actually would have done and what I will do going forward then is we're here. So we're in this market now with an exposure of 3%. Initial entry here on Monday, scale in on Wednesday, and then Thursday morning opens up. We're in profit on both of our positions, and then we are going sideways. So my thesis was that this market was going to move on, what was it? There was GBP news, I think it was GBP interest rates coming out, that this market was going to move on the GBP interest rates. I was at a party the night before, so I didn't even get up and look at the trading session. But just say I was there, switched on at the session, or just going forward, if we're already in a position and we're up in profit, we've scaled in twice, what I will do going forward then to even push the position further is reduce the risk. So actually cover here. So I've now gained back 2% of risk here. You can cover both of these positions, and you could even then scale in with an extra 1 to 2%. So then you're gone from risking the same 3% exposure to maybe then only risking 2%, but then you're in a total of 5% risk. That's how we can get uncomfortably big, but responsibly. So we can have like a 5% risk exposure sorry, 5% profit exposure with only 2% risk exposure. But that will come from building positions only when it sets up. It won't always set up like this. But again, the best trades come out of consolidations, and the best trades come from monthly extremes and daily support resistance levels. So that's really the evolution that I'm looking to take my trading in, maximize more out of certain trades, take much less trades, and then just really push them and try and maximize the profit percentage in them. Because on these higher time frame level trades, got there in the end, my win rate is upwards of 73% because we have such a strong backing and I have such a deep stop loss. It's literally taking trades only at the most secure areas and also giving yourself breathing room. So that's brilliant, but it's then to counter the low risk reward, we then want to then scale in multiple times and figure out how to do so. Then just one last thing before we go, actually, just because it actually ties in with that. This is the way that I do it. So I'll actually show you how so once I take a trade, I'll break it down and I'll look at it and I'll think, okay, how can I have actually maximized that? So I'll go in and I'll just add in the screenshots, etc. What was the optimal trade management for this? So going in and studying that, and then every single time answering, where could I have added size responsibly? And just going in and breaking it down. At which point in the trade could I have sized in? So as we continue to close below the low, scale in, this trade is showing signs of working, etc. And then just doing that for every trade that I take, just going in and answering what was the optimal trade management? And again, importantly, where could I have added size? So as we go under the low without taking out the low, scale in as price moves in your favor. So here we go. So we're near the low, we're going sideways. Explosions come outside of coils, outside of sideways movements, but we still have liquidity here. So we're now going sideways at double bottoms, go in heavy here. So if you answer that question every single day, just take one example, every trade you take, over time, you'll start to see what are the areas where you can actually push the boundaries, add some extra add some extra percent, and really scale up in size. Because that's really where the serious money is made. Like, think about it. If you're risking 1% per trade and you're making an average of, let's say, 3 to 9 or 3 to 10 or per month, you're making an average of 3 to 10% per month. Whereas if you can then push that to then be risking 2 to 3% per that, you're gone from 3 to 9 or to 10 to 30 or 10 to 30 or. So it's a massive difference. You can actually make 3 months worth of profits in 1 month. And then that just gives us the freedom to actually take less trades, to only take the creme de la creme, as they would say. Cool. Guys, I hope that helped. I'll make more videos on this if you found it useful. I think it's one of the most crucial things. And again, it's something I really learned from the playbook from the guys at, what's it called? S&B Capital, about really pushing your winners and finding out how you can make the most out of them. So cool. Hope it helped. And I'll catch you soon.